In this video, we'll be going over IRS Form 8908, Energy Efficient Home Credit. So this is an update to a video that we did maybe about a year and a half ago in the spring of 2023. And a lot has changed for the 2023 and 2024 tax years and beyond. So we'll talk about some of the new requirements to qualify for the tax credit. But in essence, Energy Star certification used to be a potential requirement, but there were other criteria that home builders could meet that were outside the Energy Star guidelines previously. Now, all homes that are qualified must meet Energy Star standards. So there are three different types of Energy Star standards. There's the residential new construction program, there's the Energy Star manufactured new homes program, and there is the Energy Star multifamily new construction program. So we don't have links to that in the show notes here, but if you go to our article, it breaks down each step of each of these steps, and it has links to the Energy Star as well as other websites that we'll talk about in just a moment. So we're gonna go through this tax form. It's pretty straightforward, and what we're going to do is spend a little bit of time talking about the requirements for each of these lines. So it is a one-page tax form. It's not that difficult to once we get to the bottom. So we'll do that just in a moment. I wanted to make sure I get all of that. So starting at the top, this is John Doe, our hero's business. He owns a company called Doe Home Constructions, and he happens to be a shareholder in S Corporation. So this would be his company's name on the return, identifying number. So this is going to go as an attachment to his Form 1120S. So you have to be a contractor. They have to have owned and had basis in the qualified new energy home during its construction to be considered eligible. So that's the first and foremost. Homeowners cannot take this credit, and there seems to be limited opportunity for anything that is not a new construction home. So there used to be a lot of home additions or home renovations that were covered by this tax credit. As we go through this, we'll kind of walk through each of the criteria. So the first one, you would enter the total number of qualified new energy efficient homes that are eligible to participate in one of the two Energy Star programs. So either the residential new construction or the Energy Star manufactured new homes program that meet the single family home requirements, but were not certified as a zero energy ready home. So all of these homes, they also have to have been either sold or leased to another person for residential use during the tax year. So you meet the criteria. It qualifies for one of the two Energy Star single family home programs, either on the new construction side or manufactured new homes. But it meets the single family home requirements, but is not certified as zero energy ready. So in this case, John Doe put two into service last year. You qualify for a $2,500 credit for each one. So we multiply that up and we get $5,000. So in line 2, we're going to enter the number of homes that meet not only the criteria laid out in line 1, but were in fact also certified as a zero energy ready home. So in this case, John Doe put two separate homes into service for a total of $10,000 credit. So let's recap right here. Single family homes under the Energy Star residential new construction or Energy Star manufactured new homes program, not certified as zero energy ready, tax credit is $2,500. Certified as zero energy ready, tax credit is $5,000. All right, so now we're going to go to the next couple, which have to do with multifamily homes. There are actually 4 of these. So when it comes to multifamily, there is an additional criteria. So not only are we dealing with the zero energy or not zero energy, we also have to deal with something called prevailing wage requirements. So in line 3A, we're going to enter the number of qualified new energy homes that are eligible under the Energy Star multifamily construction program. They meet the multifamily home requirements and the prevailing wage requirements, but are not certified as zero energy ready. So in this case, John Doe put 4 of those into service. We're going to call that $10,000. That's $2,500 per credit. In line 4A, we're going to enter the total number of qualified new energy efficient homes that are eligible to participate in the multifamily program. They meet the prevailing wage requirements and they are certified as zero energy ready. So those qualify for the maximum credit of $5,000, to which we have 3 for a total of $15,000. So now we're going to talk about the homes that do not meet prevailing wage requirements. But first, before we do that, we should probably actually discuss the prevailing wage requirements. So I'm going to actually take a page from the form instructions to go over this to make sure I don't misinterpret this. So bear with me as I get into the prevailing wage requirements. So wage requirements basically mean that the contractor has to make sure that any manual laborers, mechanics that are employed by the contractor and any subcontractors in building the home, they're paid wages that are not less than the prevailing rates in the local area. And this is based on tables determined by the Secretary of Labor. So in other words, not only are the apprentices and trained people, not only are there certified people, but they're at least at or above the standard wage rate for that locality. Obviously, that's going to depend on your location. And in our article, you'll see links to different pages where you can get area-specific guidance on what the prevailing wage rates are in your local area. So in lines 5 and line 6, we're talking about the tax credit for homes that would otherwise meet the criteria, but they don't meet the prevailing wage requirements. So in line 5A, we're talking about the total number of homes that meet the Energy Star new construction program requirements. They don't meet the prevailing wage requirements, and they're not certified as a zero energy ready home. They still get a $500 credit per home put into service. So we had 6 of those homes for a total of $3,000. In line 6A, we're going to put in the total number of qualified homes that don't meet the prevailing wage requirements, but are in fact certified as zero energy ready. In that case, they get a $1,000 credit each. So we have 5 of those for a total of $5,000. So before we go on, let's recap the 4 different possibles for multifamily home construction. So multifamily home construction that is not certified as zero energy ready, but does meet the prevailing wage requirements, $2,500. Qualified homes that meet all the requirements get up to $5,000. Qualified homes that aren't zero energy ready and don't meet the wage requirements get $500 credits. And the homes that are certified as zero energy ready but don't meet the wage requirements still get $1,000. So, so that's kind of the range. You'll notice that when it comes to single family or manufactured homes, there is no prevailing wage requirement. That's only for multifamily projects. Line 7 is going to be a carry down. So if you're a taxpayer that received an energy efficient home credit from a partnership or an S corporation, that would be a flow through credit that gets reported here on line 7. Now, if this is the only line that you're reporting on this, then you can put that directly on IRS Form 3800. That's the general business credit. And you would put that on line 1P. You don't need to fill out the rest of this form if the only line that you're completing is line 7. So in line 8, we're simply going to add everything up. All of these numbers, the 5,000, 10,000, 10,000, 15,000, all of this equals $50,000. If you're a partnership or an S corporation, this will go on Schedule K. Any other taxpayers would report this on IRS Form 3800, Part 3, line 1P. So if for some reason you're a sole proprietor that's also owns a company that's a contractor, that's built these homes, you could see yourself in a position where you're completing this form and then reporting it on IRS Form 3800. That would then go to your Schedule C. Most of the time, you're probably going to be reporting it on a company tax return. So that's all we have here. And again, in our article, we do go into a little bit more detail, and we do provide links to the different Energy Star websites, the EPA website that talks about the energy program and the new energy credit, so on and so forth. So if you like our articles, we'll put links in the show notes to articles and videos that we've created about some of the forms mentioned here. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see covered in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.